We've got revenue growing by 29%, up almost a third. You did make a headline loss for the year, but it was an improvement. Is this an indication of just an improvement in the housing market in general?
Yes, I think one shouldn't look at the results in isolation. If you split the results up into the 2 6-month periods, we did double the revenue in the second half of 2010, which equated to a 1 million rand loss for the second half compared to a 10 million rand loss for the first half of 2010.
Now, you indicate that banks are starting to lend more to your clients. We had Standard Bank recently coming out, launching their inclusive banking, targeting the lower end of the market. Capitec has always been focused on this segment. FNB also, through their Easy Pay, is focusing on this side of the market. Are banks becoming increasingly willing to lend to your client base?
Yes, definitely. I think we've seen an increase in our submissions to the banks for the last 12 months, and which you can see in the revenue starting to come through. But more importantly, the bank's strike rate, what we call it, from a submission to approval, has increased from the mid-20s to the mid-40%. So that combined with the increase in sales is obviously creating the revenue line coming through.
And what is that an indication of? Less strict lending criteria, or the case of the financial health of your clients starting to improve?
Well, both of them. The disposable income of the clients are increasing, the affordability obviously levels, and the bank's willingness to participate in the lending, which was obviously slowed down during 2008 and 2009.
Now, the FNB estate agent survey indicating that the low and middle income markets are still performing better than high income earners. You mentioned second half improvement in earnings. What is your prospects for 2011 with regards to this segment?
Well, our month-on-month sales are increasing, and we're currently sitting with about 400 approved, not registered deals in the pipeline, which we call it. In addition to that, another 400 deals submitted to the banks which have not yet been approved. So we've got plenty land available. There's definitely an appetite in our market segment, where the demand far outstrips the supply of housing units. It's just getting the funding from the banks right.
Now, you had a 14.5 million rand agreement with Clayville Gardens City Housing Company for the acquisition of 9 properties in the Clayville Township. This lapsed at the end of February. Why?
We are still battling to get finance for that. It was subject to obtaining finance for the transaction. We are still working on it, and hopefully we can still pull that one through.
What is the likelihood of securing financing for that, though?
Well, finance is even at that end of the market has been difficult over the last 3 years, but that's also starting to thaw, as we say. So I think there is definitely, we're talking to a couple of financial institutions, and there is an appetite for just getting the terms and conditions correct.
Now, you launched your strategy to target rental housing in the township market. How has this worked out for you?
Very well. We've got our first project completed and occupied last year, 176 units in Protea Glen, which is to the south of Soweto. We've now got another application in at a financial institution, which is seeming positive, and we hope to have that figure doubled by the end of this year.
But what about provision of services to the township market in areas that haven't been formally developed?
Well, all the areas which we construct units in, be it for rental or to end users, are fully serviced. So there's electricity, water, sewage supply to all of the areas. And in our rental specific areas where the 176 units are, that is an enclosed security estate. So typically, like you get in the suburbs, we just duplicated that model in the townships.
Now let's take a look at the construction side. We know that the construction sector in South Africa is in the doldrums. From your point of view, how are you managing margins on this side of the business, in light of the fact that many construction companies are having to take on projects now at a lot tighter margins than they would have considered in previous years?
The interesting thing is, if you look at the results for the last 5 years, our margins have remained constant. I think it's due to our prices which we can charge the clients have not come under pressure. It's been mainly the funding of the banks which has held us back. So there's always been a demand for our product, and therefore the units which we construct internally, which is about 70% of our total production, is done with our own construction entity, and the margins have remained constant.
Now, overall, looking at 2011, do you believe that you will make a profit in 2011, turn from a loss to a profit? Well,
if you take the work that we've got in the pipeline, which is almost 400 deals, comparing it to the amount of houses which we registered last year, which was 440 odd, I think it shows there's sufficient pipeline work already, and then the continued sales we're doing on a monthly basis. So as long as the banks just keep the taps open with the funding, we've got sufficient stock available to transfer to end users, then we should have turned the corner.
So banks are key to you're making a profit this year?
Well,
Lending.
we've got a three-tier strategy. The one is providing housing to mines, which is not affected by interest rate cycles. It's our rental portfolio, which we're doubling hopefully this year, and then the day-to-day provision of housing to end users. But in that sector, it is key.